This past week has been really rough for FTX and the cryptocurrency market in general. I personally lost $500 in the NFT that I invested that's hosted on FTX platform, which I no longer have access to. Everything's up in the air. Nobody knows what's going on. But what we do know is that cryptocurrency will never be the same. In this video, we're gonna dive deep into how FTX got into the situation they're in today and what happened exactly behind the scene. And then we'll analyze the current situation and hopefully determine whether cryptocurrency is still an investment to make for the next decade. The key person in this video is Sam Bankman Fried, who basically lost his 15 billion net worth overnight. He's probably the biggest DJ on Wall Street bets, and no one will ever top that. So first we're gonna look at how FTX was founded. As the main character of this story, Sam Bankman Fried started working on Wall Street as a trader. He was never an early investor in crypto. He never understood what Bitcoin was. He understood trading and arbitrage. And he saw an opportunity in late 2017 and early 2018 where he sees cryptocurrency traded in other countries have a higher premium than they are traded here in the United States. Some people call it the kimchi premium, for example. So what he did was that he saw this arbitrage opportunity. He bought Bitcoin in the United States, found a way to move it into a crypto wallet that's on Korea and Japanese exchanges, and sold it at a premium. And it's reported at the time he was moving $25 million worth of volume every single day. So you can imagine how much money he made during that time period. With his success trading crypto arbitrage, he was so fascinated by the industry, he decided to quit his Wall Street job and work on it full time. He founded this hedge fund called Alameda Research, basically doing the arbitrage every single day to make money. After his success with Alameda Research, he decided to open a crypto exchange in 2019. And here's one key point that you have to notice. CZ, or the founder of Binance, is one of the earliest investors in that crypto exchange. He invested $100 million into FTX, buying a 20% stake. CZ's belief at the time was to grow the cryptocurrency market together, and he believes that FTX is a great partner and a great candidate to help them do that. But later on, FTX was growing so fast, CZ got concerned because he worries FTX might overtake them as the #1 platform in the world. So when he felt threatened, he basically tried to pull little tricks here and there to stop FTX from growing and expanding into different markets. It's still unclear how exactly what he did, but one instance was that Binance didn't really help FTX get a licensing agreement from one of the countries they're trying to expand into. And this really caused tension between FTX and Binance, and basically Sam and CZ. So Sam got tired of this partnership, so he decided to buy back Binance investment in FTX. Sam spent a little over $2 billion to buy back the stake that Binance owned in FTX. And CZ was, of course, happy. His $100 million investment became $2 billion in little over 1 year. But here's another key point. In order to pay for that repurchase agreement, FTX gave Binance some FTT token, which is the utility token of FTX. Now, let's look at why FTX is growing so fast. Because they were able to offer leverage and really great trading utilities for traders. It's hard to gain access via derivatives here on cryptocurrency market because it's so uncertain and unregulated. So you don't really have good access to options and futures, and Wall Street can't really get into it because they trade such large volume. And that's what FTX is great at. They provided a platform that enable derivatives and large volume trading for people who are basically working on Wall Street. They build tools that traders will want to use, and that's why they love the platform so much and they were able to grow so quickly. As you can probably see and experience in the past 2021 crypto bull run, you can see ads of FTX running everywhere. And you can see all the finance and crypto YouTubers all have sponsorship from FTX. Everybody believe in them. And you can even see esports team being named after them. And basically an entire league being sponsored by them. They were doing really, really well. And because of how well they're doing, the private market rewarded them for that. They had a new valuation at $32 billion. And keep in mind, this is a company less than 2 years old. And with that, Sam's net worth ballooned to around $16 billion. In that $32 billion valuation, they were able to raise $500 million. And the investors are big. They are Sequoia with $213 million, Paradigm with $278 million, and Ontario's Teachers Pension at $95 million. These are big investors with a lot of money, and they're willing to bet on FTX to become the next Coinbase. But since the incident occurred, the funds basically had to send out messages to their investors that the investment into FTX are currently valued at $0. This is especially hard for the pension fund because it hurts everyday normal people who work their entire lives to put their savings into the pension fund so they can have a proper retirement. And this what really sucks. Now we've set the scene and we saw the rise of FTX and how they got to where they are today. Now we're going to talk about what was the trigger that led to the bankruptcy at FTX. I personally find this part really funny because it's just a very real example of house of cards. When one thing falls, the other parts will fall apart. So it all started with Terra Luna, which is a stable coin that gives you such a large amount of yield, around 20%, using this algorithm that balances the price, and a lot of people believe in the project. What happened there was one of the biggest hedge funds in crypto called Three Arrows Capital, 3AC, invested a lot of their funds into Terra Luna, getting that 20% yield. But there was that incident at Terra Luna where basically the entire project failed over a span of 1 week, led to the prices of Luna and the stablecoin go to basically near zero. And that led to a lot of troubles to those hedge funds who are invested in that project, including 3AC. In fact, they basically had to declare bankruptcy because their entire portfolio could not make the maintenance call and they crashed and burned. And when Three Arrow Capital went down, guess who was lending the money? Give them that leverage position to invest into the Terra project. Well, it's this other cryptocurrency company called Voyagers Digital. Here is how Voyagers make money. They take money that normal users, average users like you and me, put into the platform and be locked for a certain period of time. And in exchange, that user will get 1%, 3%, 5%, depending on the coins and depending on projects available. And what they do and how they make money is that they use those coins and they lend it out to different companies, different projects, and charge them a higher interest rate than what they would pay out to the normal users like you and me. And that's exactly what they did. They took funding from our deposits into lending the money out as a loan to hedge funds such as 3AC. And then hedge funds like 3AC will use that fund and invest in Terra Luna and get the 20% yield. So it's very stacked together. When 3AC declared they could no longer make the margin call and basically bankrupt, a loan that Voyager gave out is considered a bad loan as well. And that means the clients like you and me, the monies that we put onto the platform is gone. So you can see that trickle down effect of one big project that is so promising that everyone buys into. It fails and then it hurts the next guy who is over leveraged and hurts the next guy who lended money to people they shouldn't have in a such large amount of exposure, who then is also managing everyone's money. That causes a trickle down and a house of card effect. When Voyager Digital declared bankruptcy, the court put its assets up for sale, and FTX then decided to make a bid for all of its assets and accounts. Eventually, they won the bid at $1.3 billion, and I think what they did was they used a lot of their FTT tokens to make that purchase and make that commitment to purchase the company. From outside looking in, people say Sam Bankman Fried is the crypto Jesus, saving the crypto world from collapsing once again. And then there are other projects that FTX and Alameda Research help build out using their FTT token. But with Federal Reserve hiking rates, bear market is everywhere, in the stock market, housing market, and especially in the crypto market. The values of FTT tokens is going down day by day. But for FTX and Alameda Research, as long as the price of FTT token remains above a certain level, the tokens that they committed will still serve as a collateral and they will not get margin called. There's no confirmation what that level is, but my personal speculation is around $20. So now that we know the events just before the incident, here's what happened during the past couple weeks that led to the bankruptcy. On November 2nd, coindesk released this article stating that FTX and Alameda, that most of Alameda Research's balance sheet are made of FTT tokens. And FTT tokens is generated by FTX, which Sam can basically make up in the air. So as you can see, because Sam has controlling interest in both FTX and Alameda Research, he can basically create funds out of FTX and move it, give it to Alameda, and Alameda will put it on its balance sheet and use that as collateral to invest in other projects and companies. CoinDesk got a secret report of the Alameda Research balance sheet, and it showed that it had around $14 billion of assets. About 6 billion of them is in FTT tokens. And it has around $1 billion in Solana, which is a token Sam Bankman Fried invested in very early on. But on November 6th, CZ, remember him? He's the investor, one of the earliest investor of FTX, declared in a tweet that due to recent reports, he decided to unload the rest of his position in FTT token. Remember, that's the token that Sam Bankman Fried gave CZ and Binance in order to buy back their stake in FTX. But now CZ is stepping up and say he wants to liquidate all his position in the FTT token. And just minutes later of the tweet, the CEO of Alameda Research, Caroline Ellis, tweeted and say, "We'll buy everything back from you at $22 per token." This is why I speculate their maintenance call level is around $20 per token, because they're offering just a little bit above 20, just so the market doesn't fluctuate to that level ever. Then on November 8th, the FTT token fell below $22. That led to a reported liquidity crisis in Alameda and FTX. On the same day, CZ stepped up and offered a non-binding letter of intent to acquire FTX and try to help them out, pending due diligence, of course. But on November 9th, just one day later, Binance and CZ decided to walk away from the deal. And as you can imagine, this led to a massive panic. What could have Binance found in the due diligence process that led to them basically walk away from the deal just hours later? It caused a bank run and clients withdrawing their funds. But there are speculations that FTX is using client funds to use as collateral to make the investments that they're making. And on November 10th, Bahamian regulators froze assets of FTX. And on November 11th, FTX files for bankruptcy protection here in the US. During all of this, FTX.com, the international branch, first froze client withdrawal. Then representatives came out from FTX US saying that they are unaffected and unimpacted by the FTX.com international branch. But just a couple days later, FTX US also froze its clients from withdrawing from the platform. And on Saturday, November 12th, if you try to log into the FTX platform, you could not get through to the server. Some people are even claiming on Twitter that FTX has been hacked, and if you try to download the latest app, you'll have viruses on your phone. So they don't recommend you updating your mobile app nor trying to log into the FTX website. Some people are also speculating that this hack is so dangerous that it cannot be done just overnight by external party, and it has to be an inside job. It could very much be that people inside the company are trying to move funds into their own wallet and try to escape and basically steal everything that's left on the platform. So this is the current conclusion on FTX incident. Now we're going to analyze the impact of what everything that transpired over the past couple days will do to the crypto market. And is crypto still a worthy investment for the next decade? I was just looking at the previous recordings and I found I was just so serious about the whole topic. And it is a very serious topic because what FTX has done has caused a lot of distrust of its clients and people who are perhaps new to the crypto market. This might be their first time being defrauded on. So what does this mean for the entire crypto market? The FTX incident will not only cause distrust from its clients and users, but it causes institutional investors, the Ontario Teachers Pension, and other institutional investors are more hesitant about investing in crypto in general because incidents like this causes major backlash from their investors as well. We'll definitely see a lot more regulations coming in from the government, and when government intervenes, the enthusiasts about cryptos, the people who want a truly decentralized, so we'll really see how the crypto market will develop in the next few years. But this is also at one of the lowest point of cryptocurrencies where everybody is so hesitant, everybody is so worried about the future, and we are seeing prices reflecting that. I cannot give financial advice nor recommendations about any investment vehicles, but here's what I will be doing. I want to stop investing money into smaller cap cryptocurrencies because I personally have plenty of exposures there, and I want to put my money in the major cryptocurrencies that are also decentralized, things like Bitcoin and Ethereum. I got myself a ledger, and all the cryptocurrencies that I own, or majority of it, is hosted on this ledger. I'll be keeping less and less money on exchanges, even the ones that I trust, things like Coinbase and Gemini, because at the end of the day, not your keys, not your coins. That's the only thing that I can do in my control to protect myself. And I think you should do the same. I'll be doing more research on the major cryptocurrencies that I think can withstand this storm and are worthy investments for the next decade. Be sure to subscribe to the channel, and if you want to buy a ledger, I'll try to link in the description below. Bye!